Welcome back. This is Chili Davis, and I'm back to another video. I want to welcome back all my subscribers, so welcome to my new viewers. This is the channel where we talk about my top stocks. Well, it is Sunday evening, and I'm going to do a quick review of 3 stocks. They will be reporting this week, earnings report for the last 3 months. These companies will report their revenue and potential profits for the quarter. Okay, so we have Facebook reporting on 4/27. We have Apple reporting on 4/28, and we have Microsoft reporting on 4/26. So those are the 3 stocks I want to cover tonight. Again, we have been in a down market for the last 6 months. If we take a quick look at the NASDAQ, these are tech stocks. We've been down over 17%. So it may be a good time if you're new to the stock market to pick up these stocks, okay? The market has been beaten down, and we may have some more volatility. That means some more downward pressure. But the stock market has been down last 6 months over 17%. Go talk about the stocks we have is Apple. Apple was down on Friday, 3%. They have a 52-week low of $122. Again, we're looking to see if the company can rally and beat Wall Street estimates on this Thursday. Okay, so the Apple will report this week on 4/28 in terms of how much revenue they did, how much profit, and how many iPhones they sold, how many MacBooks or AirBooks or iPads they sold. All of that will be on this week's earnings call. Okay, so here it is, Apple reporting on 4/28. Again, they're at the 52-week low 122. And it's been just coming down of late. The last 5 days or so, the stock has come down a bit from 165 down to 161 and falling. Okay, this has to do with the Fed. The Fed is raising interest rates, just to let everybody know if you're not familiar with that. You can always check on CNBC, but Apple has a high of 182. They are flush with cash. So the reason they're flush with cash, because they sell a lot of iPhones and AirBooks and other subscription services that bring in huge revenue and lots of profit. Okay, so they do pay a 0.54% dividend annually. So that's a good thing. Okay, but right now the Fed is raising rates. That's putting a cloud over stocks in general. Okay, but I do think the market will allow Apple to rally a little bit, but it may be short-lived. It may just be for a day. The stock will pop up 5 or 6%, and then usually by the end of the day, it'll fall back to where it opened at for the day. So let's say, for example, stock opens at 161, stock goes up to 170, and probably by the end of the day, be back down to 161. Those are the kind of deals we're having in the stock market right now. Okay. All right. So Apple's a great stock to own. I always tell people, if you're starting out buying stocks, Apple's a great stock to buy. Plus, we're in a bear market, so you're probably getting the best price. Second stock is Microsoft. Microsoft is probably the number 1, number 2 software company. Basically, they have products like Zoom, real-time video where you can do business conferencing, just like you do on Zoom. Microsoft has a product called Teams. They also have the cloud. So a lot of new apps are hosted in the cloud. Microsoft has a product called Azure. Okay. So Microsoft, if we were in a good stock market, Microsoft would trade around this $340 mark. But because we're in a bear market, the stock is trading highly undervalued at $274 per share. Okay, you're seeing a lot of volatility in all stocks right now. It's been happening over the last 6 months. Well, if we just look a year back, Microsoft was trading at $323 per share. Okay, so yeah, there's a little bit of doom and gloom for the next couple of months, but these could turn around. Okay, but Microsoft will report this week, and you'll probably see a spike for a day, and then they'll probably return back to its present value of 274. Just like Apple, they will probably rally for a day and then they'll come back down. Okay. So that's just to let you know, Microsoft is a great high quality stock to own. And again, as a 52-week high of $349, and they do pay a dividend of 0.91%. Okay. This stock has been beat now, so it may be a great time to pick up Microsoft. All right. And the last stock I want to cover tonight is Facebook, also known as the Meta platforms. Reason why Facebook decided to change their name is because they deal with several platforms. Facebook owns WhatsApp, they own Instagram, and they own Oculus. So the reason why they decided to change the name, because they want to be known as a platform that hosts several social media giants such as Oculus, Instagram, WhatsApp, that type of thing. Okay. And then it's more, it has a more, I guess, contemporary name, Meta platforms, possibly to do with metaverse. Okay. Facebook has invested a lot in the metaverse. So they went ahead, Mark Zuckerberg and the leadership decided to change the brand, the name to Meta platform. But we know them as their flagship product, which is Facebook. Okay, now Facebook has been severely beaten now. If we look about a year ago, the stock was trading at $373. Again, Facebook has high cash flow, a lot of revenue paid to them by advertisers. Some big companies such as Coca-Cola pay a lot of money to Facebook to run their ads. Okay. So I'm not sure why the stock value is not being reflected correctly, but there have been so many issues with social media about banning content or sharing content or restricting content. There's been a lot of negative stuff around Facebook in general or any of the social media platforms. Again, Facebook is trading at 50% of its value of a year ago. It says here 39.25%. I roughly chalked that up as half. Right here, they were trading on Friday at $184. And that's the low. The low is 183. And then the high is $384. But again, I believe Mark Zuckerberg can steer this ship back. But because we're in a bear market, we may get a slight pop, but it'll revert back to the 180 zone. So you might see it for a day, go up to 189, 190 or something, but it'll probably come back down. Okay. But I think Facebook at $184 and some change is a steal. Again, Mark Zuckerberg is running this company. He's looking into the future, the metaverse, and there's several other assets such as Instagram, WhatsApp, and Oculus. Okay, he's looking into the future. That's the cool thing about Facebook and the Meta platforms. They're not thinking about right now. And, many advertisers have a right to understand where is the future of Facebook. Many people like the current legacy business model, the whole advertisement, but that is quickly changing as we shift to a different, more lively platform such as TikTok. Instagram is competing with platforms like TikTok, and so they have to change. So that's what Facebook is in the process of doing. They changed the name earlier late last year, and Mark Zuckerberg is aiming the company to a new territory such as the metaverse. Okay, so it's be like the Disney-like family feel of the metaverse. It'll be a safe metaverse, and so we'll see what Mark Zuckerberg has to say about the last 3 months of revenue and profits and how well they did under the new banner of Meta platforms, and see what other progress they've made on these metaverse projects. Okay, so that is earnings for this week. Again, there'll be several other companies report, but the main ones I want to talk about was Meta or Facebook, Apple, and Microsoft. Again, these are some top companies, and they will make a difference on the market. They may rally the market for a day or two. So check those companies out. Again, you can always check out CNBC. They have live updates all day long, showing you the market, the main markets, such as the Dow Jones, the S&P, and the NASDAQ. They will be sharing a lot of information on CNBC. Again, they will probably have the announcements on what Apple does if they beat Wall Street estimates or if they fall short of Wall Street estimates. So I want to thank you for watching. Thank you for listening. Please like, share. And if you'd like to get some free stock, please use my Robinhood link or my Webull link found below. Thank you and have a great week this week in the stock market.